Okay, let's just jump right in because today's explainer is going on a seriously fascinating journey. We're going to map out the exact mechanics of value, exchange, and growth. And we're going to do it in kind of a wild way, starting super wide with the hidden laws of global economies, and then zooming literally all the way in to apply those exact same laws to growing on YouTube. It's a brilliant connection, and as you'll see, it makes total sense once we lay it all out. To kick things off, I've got a historical puzzle for you. Why do good intentions often ruin economies? Well, back in 2008, the state of Maryland faced a massive budget crisis. They needed cash fast, so politicians came up with what seemed like a foolproof idea: let's just tax the rich. They counted roughly 8,000 millionaires living in the state, ran the math, and figured if they just nudged up their taxes, they'd rake in an extra $106 million every single year. Problem solved, right? I mean, the intention was great. But year two rolls around, and they absolutely did not gain $106 million. Actually, the data shows Maryland lost $257 million in total tax revenue. No way, right? How does that happen? Well, when they counted the millionaires again, only 6,000 were left. 2,000 of them had just vanished. They packed up and moved to other states, taking their businesses, their restaurants, the whole shebang with them. The source uses this to prove a really crucial point. People don't respond to good intentions, they respond to actual rewards. Maryland intended to raise money, but they kind of ended up rewarding millionaires for leaving. So here is our roadmap for today's explainer. First, we'll cover the hidden laws of economics. Then, decoding visual psychology. After that, surviving YouTube copyright rules. Followed by the ultimate creator toolkit, and we'll wrap up with formats that drive growth.
Okay, part one, the hidden laws of economics, understanding trade-offs and signals.
So fundamentally, the source notes that economics really isn't about what you have, it's about what you do with what you have. And this brings us to a terrifying but absolutely powerful concept: trade-offs. Let's say you go out and buy a $50,000 BMW. Beautiful leather seats, you're feeling like $1,000,000. But imagine for a second if you had bought a $20,000 Toyota Corolla instead and invested that $30,000 difference. Over 30 years, that money could grow to nearly $250,000. So that BMW, it didn't just cost you 50 grand. The hidden cost was $250,000 in lost potential. Every single choice literally means giving something else up. Which brings us to our next hidden law. There's this famous story where Soviet leader Mikhail Gorbachev visits Britain and asks Prime Minister Margaret Thatcher, "How do you make sure people get food?" And her reply was just brilliant. She said, "I don't. Prices do." Think about it. There is no central government office coordinating millions of daily meals in London. When something is scarce, the price goes up, and that naturally signals suppliers to rush in and make more of it. Prices are just honest signals coordinating global supply. Now, the source argues that ignoring these price signals can backfire terribly, and points to rent control in New York City as a perfect example. The intention? Totally noble, help people afford housing, but the analysis suggests the actual rewards created a completely different reality. Because landlords were blocked from charging enough to cover their costs, they just stopped repairing roofs, and eventually they abandoned the buildings entirely. So now you end up with thousands of empty, rotting apartments while homeless people are sleeping right outside. The argument here is that price controls break the system. It's kind of like announcing free unlimited pizza in a school lunchroom. The first kids in line hoard everything, and the ones who actually need it end up with empty stomachs. The material extends this exact idea to wages, basically framing your wage as just another price. Let's look at this chart visualizing value creation. Say Maria works at a lemonade stand and she brings in $10 of extra value every hour. Well, if a minimum wage of $15 is mandated, the business instantly takes a $5 loss for every hour she's on the clock. The source argues that, faced with a loss, the owner is highly incentivized to just replace her with a self-checkout machine. The big takeaway here is that employers are ultimately paying for results, not just time. Moving on to section 2, decoding visual psychology, signaling value on YouTube. Okay, so we can apply these exact economic signals to the ultimate modern marketplace, YouTube. Because in the attention economy, your thumbnail is acting exactly like a market price. It is signaling value to the viewer. For faceless channels, crafting that signal means following some pretty strict rules of viral visual psychology. You absolutely must create an open curiosity gap. Use hard color contrast, think bright red versus green, and limit the whole design to just one or two focal elements. On the flip side, you want to avoid revealing the outcome in the thumbnail, stay away from cluttered scenes, and actually skip using real human faces for these automated formats. Let's break down how this visual value changes depending on your specific niche. If you're running an entertainment channel, your thumbnails need to highlight this strange, unexplained tension. Now, for educational content, you want to showcase hidden truths, like slapping a giant warning label over a common, everyday pill. And for animated channels, you need to capture surreal, absurd moments right before a shocking event happens. Unless, your goal is to get 0 views. By doing this, you're signaling immense value because you're sparking an irresistible question in the viewer's mind.
All right, Section 3, Surviving YouTube Copyright Rules, Protecting Your Value.
Because once you're creating all this value, you have to protect it, right? The YouTube economy has incredibly strict property rights, especially when you're trying to navigate sports clips. So first, we really need to define fair use and clear up a massive misconception. Fair use is a legal doctrine, yes, but it is absolutely not an automatic shield. Pasting some long legal disclaimer in your video description, that is definitely not going to protect you from copyright bots. To survive, you have to meaningfully transform the original material. We're talking your own commentary, your analysis, your specific edits. So let's walk through a critical step-by-step survival guide to bypass those automated systems. Step 1, cut all your clips down to under 10 seconds. Step 2, completely mute the original crowd and commentator audio. Step 3, blur out any sponsor logos and scoreboards. Step 4, add your own custom voiceover. And Step 5, try to prioritize replays and cinematic footage over live broadcasts. Now, the real danger here lies in which sports properties you actually choose to cover. As you can see, local leagues are relatively low risk, but massive properties like the NFL, the ICC World Cup, or franchise leagues like the IPL and UFC, they are ruthlessly protected by major media companies. Automatic strikes here are practically guaranteed unless you stick strictly to still images or heavily altered replays. Next up, Section 4, the Ultimate Creator Toolkit, Finding the Right Resources. Let's tie this back to the economics of trade. Smart creators know that trade creates wealth. They do not waste time making every single asset from scratch. Instead, they source high-quality raw materials from the outside. If you need risk-free assets for your edits, here are the absolute best free stock video websites that require 0 attribution. Pexels Videos is fantastic for 4K and HD footage. Pixabay gives you a massive library under the CC0 license. Mixkit is perfect if you need that cinematic quality. VidiZ is your spot for great drone and urban shots, and Cover is definitely the go-to for lifestyle themes. But hey, if you want full commercial freedom and are willing to pay, here are the top 5 paid stock sites. ArtGrid has incredible cinematic, film-style sequences. Envato Elements is awesome because it gives you unlimited downloads for just 1 subscription. Storyblocks is a goldmine for After Effects templates. Motion Array has you covered for sound effects, and Deposit Photos has this massive searchable database. A quick pro tip here, as a creator, you should always be looking for lifetime deals on sites like AppSumo so you can really maximize your capital. And finally, Section 5, Formats that drive growth, trading time for value. This is where we bring the whole shebang together. The ultimate application of economic trade-offs is literally how you spend your time. You win by trading your time to double down on proven formats that send the highest value signals. I'm talking about viral titles. Think of formats like the controversial downfall of X, how X destroyed Y, or the satisfying downfall of X. Are you noticing the pattern here? These are negative, conflict-driven titles. They tap perfectly into human curiosity and schadenfreude, and they consistently yield the highest return in the attention economy. And to actually deliver on those titles, you need distinct visual packaging. Here are 5 trending video editing formats that really differentiate successful channels right now. We've got whiteboard animation videos, 3D explainers, dumb pencil animation, slow cinematic editing, which is great for videos over 20 minutes, and that old vibe slow editing style that uses 0 stock footage. In a hyper-saturated market, standing out like this creates exponential value. Which brings us to our final slide, and honestly, a pretty provocative question I want you to sit with. Are you wasting hours trying to fix your weaknesses? Or are you trading your time to double down on the value that only you can create? Because every single hour spent on a weakness is an hour stolen from your strength. Whether we are talking about global macroeconomics or growing a YouTube channel, success always comes down to maximizing what works and ruthlessly cutting the rest. I really hope this explainer completely changes how you view value and growth. Thanks so much for joining.